Finance Minister Enoch Godongwana, he had a busy week last week, didn't he? He's reduced government spending to 27.6% of GDP. It was at 28.6% in the 23-24 financial year. So at least it's good news it's coming down. Godongwana is saying that Treasury will ensure higher levels of capital investment by stabilizing and reducing borrowing costs and directing a growing share of public spending towards capital projects which will make us money in years to come. Executive Director at the Centre for Risk Analysis, Chris Hattingh, joining us to talk about the policy budget speech from late last week. Hi there, Chris. Good to have you with us. A couple of key takeaways. I know you and your team focused on the nitty-gritty of it. I won't have time to go through everything in such detail as you did, but it all comes down to investor or consumer confidence. That's what's going to grow the economy, obviously. Did you hear that in the speech, Chris? Morning.
Good morning, Gareth, and thanks for the opportunity. Look, I think this was as realistic a budget as one could have expected, given the country's economic growth challenges, given tax revenue collection challenges, where tax revenue is coming in at 22 billion rand less than estimated in the February budget earlier this year. The government at the moment is under a lot of fiscal pressure, but also, of course, corporates and consumers or taxpayers, individual taxpayers who for a couple of years now have strained under high inflation. We've got economic growth under, let's say, 1% most of the time. In that context, it's difficult for government to spend its way into economic growth or out of debt problems. So at the moment, I think credit to Treasury for, I think, a very honest medium-term budget policy statement. We'll see now if the lines on, for example, bailouts to SOEs